Hello, welcome to our midweek business news report. It's now time to bring you a feature on the show today as we focus on the financial services sector in Nigeria. According to some reports now, about 600 microfinance banks, representing two-thirds of licensed microfinance banks in the country, may shut operations if they fail to meet the recapitalization deadline set for the end of this month. In April last year, the Central Bank of Nigeria extended deadlines issued to microfinance banks to comply with its revised minimum capital requirements. Now, this is contained in a circular issued to all microfinance banks on April the 29th, 2020, and also signed by the CBN's Director, Financial Policy and Regulation Department, Kevin Amugo, taking into consideration the impact of the coronavirus pandemic on economic activities, and has hence revised the deadlines for the compliance with the minimum capital requirement for microfinance banks in the country. Consequently, now, microfinance banks operating in rural, unbanked and underbanked areas, that's Tier 2 category, shall meet the 35 million naira capital threshold by the end of this month and 50 million naira cash registry by the end of April 2022. Now, for microfinance banks operating in urban centers and high-density banked areas, that's the Tier 1 category, they're expected to meet the 100 million naira capital threshold by the end of this month and 200 million naira capital threshold by the end of April 2022. The state microfinance banks are also expected to increase their capital to 500 million naira by the end of this month and 1 billion naira by the end of April next year. National MFBs are also expected to meet the minimum capital of about 3.5 billion naira by the end of this month to 5 billion naira as well by the end of April 2022. The last time such recapitalization occurred for microfinance banks was in the year 2018, and according to the CBN, the changes are made to improve the performance of the microfinance banks in the financial industry. Joining me now live in our Lagos studio to discuss this deadline and the state of microfinance banks in Nigeria, I have with me financial analyst Adeola Ojo. Good to have you on the breakfast show this morning.
Good morning.
Now, the World Bank estimates that more than 500 million people globally have benefited one way or the other from microfinance-related operations. Now, we can also replicate this to the integral role the banks have in terms of poverty alleviation reaching the masses in Nigeria. What's the worst implication you see if the banks miss this deadline?
As you have said, the major reason why microfinance banks were set up was to alleviate poverty, reach out to the unbanked, the poor, those at the lower rung of the economy, be able to meet the needs and help the SMEs in those areas to be able to grow. So if they should go down, then all these areas, these sectors of the economy is going to be affected. The people they are meant to target to actually serve will also suffer, and the economy as a whole, because they are to serve the micro aspect of the economy. And eventually when the micro is affected, the macro will be also affected.
And then also looking at the fact that we've had the hit from COVID-19, we're still seeing businesses gradually trying to regain some balance at this point in time. One of the biggest concerns for so many microfinance banks is also credit risk management. Now we still have general non-performing loan rate at about 6% for general banking space, but at the end of the day, we cannot put so much of pressure on these banks, because those who have taken loans for their businesses, that's comprising about 38% for agricultural loans, about 17%. It's still a tough situation. Do you think we might likely see another extension?
Basically, I think we should not mix the two together. Capitalization and the amount of money being loaned, they are not the same.
Yes.
One has to do with, okay, this is the capacity,
your revenue base
that you have. The other one has to do with revenue, because that one is a function of the deposit, whatever capital that the owner put into the business in order for the business to run.
Exactly.
The capital base is actually telling you this is the cushion. This is what the minimum requirement I want you to have for you to be able to run. And in such, yeah, part of the money may be used to run the business, but in every sense, we should not miss the two. Basically, I would say because of the challenges of COVID, it has impacted their ability to meet the needs of the people. Many people are owing, the non-performing loans are also increasing. So in one way or the other, I just want to say that at this stage, both of them are not the same, but they can also work together.
And how then do we also increase our risk management assessment at this point in time now to know the areas to go into and then where caution has to really play a big part?
I think they have done a good job in this respect, even from 2 years, 3 years, even last year. They have been able to do a good job. By the time we're looking at the performing loans, third quarter last year, we actually saw what they have been able to put in place. Every sector of the bank, both at the micro level and at the commercial bank level, have put measures in place to be able to mitigate these risks. So, and I think it's still a thing that is in place because CBN has been able to work within that sphere, and they are performing very well in that area.
How do we also change the narrative where people see microfinance banks loans coming at a much higher cost?
Yes, it's
This is supposed to go to those who are not necessarily well off, the needy in our society, to support SMEs, to support households. Why do we have those higher rates?
Because there are so many reasons. One, the source of funding of the microfinance bank has not been stable. One, apart from this capital base that they have of donors, whatever donor they're going to have, donors, whatever a particular person is going to, maybe the owner of the organization or the owners of the organization will put into that microfinance bank. Apart from those ones, ability to source for fund has been a bit low with microfinance banks. And our government also has not been fully active in financing microfinance banks. So as a result of that, when your revenue, what you are expecting, your sources of fund is a bit restricted, and the level of people you are going to serve is a bit much. And also in that context, you are going to serve, you also have some expenses to actually, your salaries, your running costs. So eventually they factor all this into the amount, the small money they have. And that is the reason why most of the time, the fund you assess at the microfinance level is higher in rate. Most of the time it's 40-something%, 37, 48, because what the outcome about 3%, 4% every month. And by the time you calculate per year, 4% in 1 year is 48%.
So in other words, will you say this is not exploitative?
It is not, until they have alternative sources of funding that will help them mitigate those costs, then they won't be able to come down.
Let's go back to the categorization of the loan products that so many individuals go for, starting off with businesses now. How then do we now also attempt to lower these rates? Like you made mention of, until they have that balance in terms of their sources of funding, then the rate to come a little lower. But looking at the categorization, business loans come first. You have consumption, also followed by about 24%, unspecified loans 22%, and agricultural loans about 17%. These are crucial sectors of the economy, crucial to the masses and even the general populace as a whole. How do we now also properly position these sectors if we're not having access to funds?
Yeah, I think the federal government and the CBN have been able to come down in that area. They have specialized banks or specialized fund for agric. They've been able to, because they found out that most of these microfinance banks will not be able to meet this area. So they've been able to have specialized bank for industries, BOI, that's the Bank of Industry.
Yes.
They have some for agriculture, NISAL and co. So they have been able to have specialized banks to attend to these varying areas of need. So invariably, what I would suggest to the government is that, one, apart from financing these major areas of banks that they have funded majorly to serve these areas, they should also give credence to the microfinance banks. Maybe at one time or the other, come support them, push them. Look at which areas, like this area now, that they can come in to actually support them, so that at the end, everyone can work together to make this economy, to grow this economy.
Now, what sort of growth forecast do you see for microfinance banks in the country at this point in time for Q2 2021?
Because when we're looking at their performance, Q3 2020, they didn't perform very well. And Q4 2020 also, because of the recession, yeah, we came out.
I'm asking this because the fragility of the Nigerian economy is still our biggest concern. We are technically out of recession, but the balance or the growth recovery process is still a little bit slow. The IMF is projecting that we would see about a 2.5% growth. World Bank is saying, well, 2.3 to about 3.4%. But these are still hinged on how much of a drive that we have on the part of government and also local investors to ensure that we have a very sound business climate.
Sure. So basically, let me just finalize that by saying that from this quarter, the past quarter, that's quarter one, I believe that it's going to be a little growth compared to quarter three and quarter four last year. Maybe in this second quarter, we're going to see after the recapitalization, because one of the things I came to know is that after recapitalization efforts, after margin and acquisition, you have
tension eases a little bit.
Tension comes in, then you have more funds to run, and you can actually grow.
Thank you very much for your time on the Breakfast Show this morning, Adiola Ojo. It's been a pleasure speaking with you, and we just hope that the tension eases. We wouldn't want to see all these microfinance banks lose their licenses. We just hope that they're able to meet the recapitalization deadline. It's been a pleasure speaking with you.
Thank you so much.